What's up, traders? Welcome back to the Day Trading Show. In today's episode, we've got another special guest. Mark comes in from actually James's neighborhood, and we talk a lot about prop trading. We talk a lot about today's current market and what Mark has learned in his trading career, which spans all the way back to the early 2000s. So you're going to take a lot of value. Make sure you shut off TradingView, put your phone away, and enjoy the episode. All right, what's going on, everybody? Welcome back to the podcast. Today, we have another special guest. Mark is coming to us all the way from James's neighborhood, actually, right? From South Africa. So this should be really exciting because Mark has extensive experience trading with prop firms. He's seen all of these funding companies come up and some fail, some succeed. So I feel like, Mark, we have a lot to talk about, but thanks for being here, brother. It's really good to meet you.
Yeah, thank you for having me on the show, guys.
Absolutely.
Looking forward to it.
Absolutely. So I was saying before we started recording, you and James know each other kind of like through some mutual friends. You were watching rugby and kind of hit it off. What was it, James, that like in the conversation with Mark that said to you, oh, we got to get this guy on the podcast? I'm curious. What made you think I want Mark on the show?
Yeah, no. So like I'm quite hesitant on the weekends, as I was saying, to speak to guys about trading. That also you don't know how much one knows like in depth about trading or how seriously they do take their trading, you know.
Yeah.
And then when Mark started mentioning prop firms and that he works for Storm Trading, which he'll talk about more later in the episode, but I was like, yeah, this guy's proper. Like, geez, he works full time as a trader. And he was mentioning guys like, you know, books like Mike Bellafiore, and we're talking about Steve Burns and stuff like that. And then the fact that he was trading full time for a prop firm, which is amazing, you know. And then on top of that, I just mentioned the books, and then I was like, you know, this guy's proper. And the way that he speaks, you know, his lingo, you can just hear when someone speaks.
He didn't call himself a NASDAQ killer, right?
Yeah, exactly.
Exactly. So no, that's good. That's good. So Mark, with your experience with your prop firm, how long have you been trading there? You said it's 2011?
Yeah, since the end of 2011. So yeah, going on 11 years, I would say almost 11 years. Yeah.
How big is the firm now? Is everybody in office or do they have remote traders too?
So since COVID happened, there's probably a few breakouts that happened, and I was one of those guys that actually broke away at the time. Still working with him, but just remotely now.
Nice.
But most of the guys are actually still in house, and it's yeah. I mean, it's quite an amazing place. I'm not going to lie. It's a big house. It's like a big mansion that these guys started probably in the early 2000s. And the guys that started actually came from the stock market floor in Johannesburg, the JSE, the Johannesburg Stock Exchange. So they're real old school guys. I mean, They're all in their late 50s, 60s now. And they started this firm, and they probably, to begin with, there was probably only about 10 or 11 guys that started, and they all had trading backgrounds somewhat, but they really became sort of an elite a group of guys, and quite well known around South Africa. I mean, I would say Storm's probably the most well known and probably best prop firm, definitely best prop firm, I would say, in South Africa. But back to what the actual place was, and when I started my journey there, it was this big house, and I mean, I started with 3 other guys, and we all went in there as junior traders with these senior traders. We're only a few years older than us, and a couple of guys a lot older, with experienced guys, sort of the guys funding the whole thing.
Right.
And yeah, this mansion was, I want to like say, it was like a Wolf of Wall Street type like mansion. I mean, we had this huge bar, we had a swimming pool, we had a chef, we had a private chef, we had a gym, and then all of this was on the downstairs, and upstairs was this massive like trading floor with just all these monitors and, I mean, TVs and you name it. It was the real deal.
So what brought you to the firm originally? Did you know you just wanted to get into trading and they were the best option?
Yeah, so I studied finance at university, and I wasn't entirely sure I wanted to go in trading, but I had a knack for that sort of thing. I mean, I played a lot of online poker, that sort of thing. I mean, I know a lot of traders say that they did that before they went. So I had a bit of risk appetite, and I wasn't scared to maybe gamble a little bit. And And I was young. I was 23, I think, when I started. And I went in there with the mindset of a sort of a casual place, and I was, straight away I was knocked straight back down to ground, and showing that this is like the real deal. I mean, you can't mess around here. You're playing with real money, and you're playing in a real market, and it was a very rude awakening for me, but a really good rude awakening.
For sure. So what was the learning curve like when you first showed up? Was it like they were teaching you how to trade, so maybe in first 6 months to a year you start to make some money? Or was it kind of like, hey, you're in here, figure it out for yourself?
No, so there was a real program that the guys implemented with us. And I think Storm would normally only take about 2 or 3 new guys on every year. So it was quite a hard thing to get into. And I was lucky I had a connection and a family connection that sort of got me into the door. And that's why I joined the 3 traders that I started with. We started our journey together. And it was about 3 months of like hard research, basically studying. Like they kind of made you study things that, I mean, when you go live in trading, they were all irrelevant, but it was all just a base building experience, I think. Sure. And I mean, we would have morning meetings every morning. We'd have to do market research, and us as the junior guys would have to put forward trade ideas. We'd have to like really give our input to try and show that we had what it takes. So we had about a 3-month period of doing that. And then we started a 3-month demo period where we would go in the market, but with demo accounts. And that was an interesting time for me, especially. I think the other 2 traders that were with me, they were making like profits on the demo accounts, and I was just making loss after loss after loss.
Really?
It was, but I guess it was just you had to be really honest with yourself trading a demo accounts, because when you go live, then there's no fooling anybody. The markets,
Was the period on the demo account, when you look back on it, was it really important for you? Because everybody that you talk to about trading talks crap about demo accounts. They say, don't use them. It doesn't do. But I've always told people, like, when you're new, it's stupid to put live money in, because what if you put the wrong position size in or you make a mistake? So when you look back on it, do you think that demo period, even though there was a lot of losses, do you feel like it was still valuable to your longer term growth?
Most definitely. I mean, especially when it comes to execution and the kind of style of trading we were doing. We were trading equities on the Johannesburg Stock Exchange. And you had to learn to execute, especially on the platforms you were using. It was quite complicated. It wasn't as simple as, okay, just buy, sell. There was a lot of things that could go wrong, and did go wrong. I'm not going to lie. There were a few times where we would put in the price of the share or put in the volume instead of the price, and all of a sudden hit enter.
That's exactly what I'm saying. You meant 10 lots and you end up with 100 lots or something like that, right?
Exactly. Yeah. So there were a few finger faults, which and at the time also there was no stop losses that were guaranteed or anything. It was very much like, oh shit, you take the loss. That's tough tackies. So yeah, it was very worthwhile having that demo time and really getting that execution ironed out.
So now, being there so long, are you now one of the senior traders there helping to coach the newer guys, or are you more focused just on trading the capital that the firm has allocated to you?
Yeah, so for me now, I'm purely focused on trading for myself right now, especially when I left the actual physical firm to go remote. It's been hard. Only in the last few years have we started using Discords and that as well to help the newer guys. Yeah. But all the new traders that they take on will have to go through the firm. They won't take on anybody. Yeah, they won't take anybody on remotes, I don't think.
What do you think the reason for that is? Is it because the learning in person is just so much more fast-paced and impactful? Is that really it?
Yeah, I think so. I mean, just to be honest, like so we started in 2012, we went live. I think the guys the following year, there were 3 guys probably for the next 3 years on per year that came into the firm. Not one of those guys is still around.
Wow.
In terms of trading. Yeah. So there was
Why do you think that
few
is?
years.
Do you think that it's just because the prop firm environment is hard, or do you think it's the market itself is just not for everybody?
Yeah, I think the market got a bit tough over that period. But at the same time, I just think, the guys weren't cut out. And I mean, I think it's a tough game to survive.
Yeah.
Especially the long game.
Yeah.
There were a few guys that made quick bucks here and there, but that's,
They fade, they fade. They don't last.
They fade, exactly. Yeah.
I find the background makes the difference in how long someone lasts. So for you to have the background from a professional standpoint before the firm, but then also to have the characteristics of, playing poker and learning how to read risk and try to understand. I find that some of the best traders that I know consider themselves degenerate gamblers outside of their trading. They somehow have a switch where they can apply good risk and good rules when it comes to trading, but they love to gamble. They love to say, I'll bet you $50 or $100. I'll bet you $200 on this or that. They love to play the odds of probability. Wouldn't you agree?
Yeah, that's definitely true. Even myself, sometimes I'm always open for a sports bet or something like that. I mean,
of course.
It's in the nature.
What are you doing for fun, Mark? Are you getting time off the desk, or is the prop firm environment really as intense as they say? Because, funding companies like James and I are working with these funded companies that they don't teach you at all. They just say, if you can trade well, you get funded. It's different than a prop firm. I feel like a prop firm is like such a family more environment. Am I right, or am I wrong in that?
You are very right. So we're back to Storm now. The culture that was there was such a big factor in terms of probably my success and a lot of the guys that are still there now today.
Yeah.
I think the motto at Storm, and it was on the bar, above our bar, it was called One Team, One Dream, and it was the One Team, One Dream bar. And this bar was quite a centerpiece to the firm itself. I mean, guys would go down to the bar after work, whether they won or lost, and they would have a drink together and just discuss the day and what happened. And you know what I mean? It was real camaraderie that sort of was created. And that culture, I think, is a huge factor.
Do you miss it? I mean, being at home, do you miss it?
I do. I'm not going to lie. I do.
I figured.
Yeah. I try to go back there a few times a year just to catch up and see the guys and really get into it.
It's such a or not talked about enough topic in trading. I feel like it's the camaraderie and the community that you need in order to grow. Like if you just try to go trade off on your own, how far is that really going to get you? You're getting no feedback. You're getting no new ideas. You're just building on bad habits because no one's telling you that they're wrong. It's so terrible to be off on your own. Not even all of that. Just like you said, to just go and talk to someone and be like, hey man, how'd you do today? Oh, you lost 20 grand. I lost 40. Okay. Let's have a drink. Cheers. Like let it go. Because, something that I've learned in my coaching, and I think James will tell you too, like Ivan, one of our guys in our Black Shirt Club, he recently was talking about how he feels like he kind of fell out of focus, fell out of routine, got distracted, but being able to then come and vent that to our team. He got such great feedback in the chat last night. One of the guys in our group literally, so Tom answered Ivan and someone else in the group said, Tom, I wish you would be my dad, bro. You give such great advice. But it's so true, because if Ivan was to just be off on his own, I don't know that he would even come back to trading or have the motivation to come back. So I think it's very under discussed how important the community is. So now being remote, what are you doing to stay tapped into the community?
Just going back to that. So when I actually did leave and go remote, I did have a period where I was trading by myself for the first time, trading out of our spare bedroom. I had no interaction. I was no trade ideas were coming my way, or guys shouting this there, that's happening, this there, missing breaking news sort of thing.
Right.
So I went through a lull period with my trading, and probably towards the end of 2020 during COVID was actually a really good time for trading, just the volatility. I mean, crashing it then, but then towards the end, I missed the having people around me again, and it became a tough environment. But slowly, I've kind of got myself back on back to where I should be in terms of my trading, and I guess the Discord facilities, that sort of thing has helped. Also, meeting with friends that are traders or other traders, now that I live in Durban, not Cape Town, I have met a few guys, and luckily to meet James now as well in the last few weeks, because we'll definitely continue our conversations going forward.
Sure.
You know, it's funny, you never know who's trading right around the corner.
Yeah.
I just had a call with a guy today, and he was like, I was like, where are you calling me from? He's selling yacht insurance, like big yachts insurance for that. He's looking to get into trading. He saw my course and everything, and he's like, sitting on this boat, and I'm like, bro, where are you calling me from? I'm thinking he's going to say the Caribbean or something. He said St. Petersburg. I'm like, bro, you're 20 minutes south of me. That's crazy. I didn't even know you were here. And he's like, yeah, my buddy Matt. I do know Matt. He lives around here. He's a trader. So I try to get all of the guys together for like networking, for just some beers occasionally. But like, I have found that when you're remote, you have to be on Discord. You've got to be talking to other traders. You've got to be on some type of app. Because if you just sit here by yourself all day, I think you go crazy. Wouldn't you agree, James?
Big time. Like I was going to say, like that's also the thing that why I wanted to get Mark on the podcast is because he's got experience. I mean, he's 34 years old now. He's Mark, you 10 years older than me now, but like Mark's already someone that I look up to, and I've only met him now for 3 weeks, not even for 3 weeks. So last week, Friday, I went to his trading room where he is now, because he stays literally 20 minutes, 25-minute drive back into Umhlanga from Belito. And I went there and we just spoke trading for literally like, I was going to go there for like an hour or two. I sat there for like 4.5 hours and we just spoke trading. I think the cool thing is that, and not about like the camaraderie and that type of thing is, traders, we crazy people, bro. We, to trade full time, like you have to have balls and you crazy, like just to vent to someone else about trading and like the losses that you've taken in trading and the experiences that you've had and how tough and resilient you have to be, and speaking to Mark like that, but in person, not even over the phone or anything or on Discord, is like, it does really, really help. Especially from someone that's had it and been there and seen everything for a lot longer than you as well. So touching on that, it's a great segue into my next question for Mark. Do you feel, Mark, that because you mentioned already trading during COVID was good, after COVID, it got a little hairy. Where with markets where they're at right now, let's say first, what are you trading most? Is it still the JSE, or have you shifted to US equities now?
So I am currently trading, I would say I'm trading my indices a lot lately. That has been sort of where my focus has been.
Yeah.
I'm still trading the JSE every day. I'll trade the JSE. It's sort of my bread and butter. It's for me, it's like riding a bike for me. I'll mainly trade the morning or the afternoon session. But yeah, so now, but my big focus really is the indices at the moment. Mainly the Dow, the Nasdaq, S&P, and then also trade the futures market of the JSE itself, the Aussie.
How liquid is that? Is that super liquid?
Yeah, so that's liquid. The JSE itself is not liquid.
Okay,
so
that's
it's a tough environment. Yeah. The JSE trading on the equity exchange, yeah, it's not liquid. It's a tough environment. And I have been trading the US equities now, and I'm about to start going like seriously live into trading the US equities now, also funded by Storm. And that's my next step now. And I've experience in it. So I mean, I've traded US indices before, but on random platforms, and I've never really got it right. And now we've got the full setup coming, and it's a real, I'm looking forward to that.
No, for sure.
Because I think, yeah,
so with
there's a game there.
Yeah.
I wanted to ask Mark, with that, with trading the JSE now going into trading the US equities, how are you actually taking your positions? Is it through technical analysis, reading the tape, fundamental bias? How are you finding your positions, or your and how are you taking your positions? So what type of analysis?
So the type of trader I've been, and the type of trader I sort of was groomed to become when I started trading with Storm, was mainly reading the tape. We learned price action from the get-go, and it was at a time also when algorithms were starting to come into the market. It was I think like 2013, 2014, the algorithms really came into the market, and high frequency trading really came into the market. So us as day traders, intraday traders, were now up against these algos, and we had to really up our game to stay alive trading, because I mean you couldn't get prices, especially with the liquidity. You'd miss your price or miss your stop loss because the algos would shake you out, or it became quite a hard game at the time. But we adapted quite quickly with that, and actually learn to read the algorithms and start picking up on how to manipulate the algorithms almost.
Because it's just a formula,
obviously,
right? Like if it's just a formula, you can figure it out.
Exactly. Yeah. I mean, at one point, we even had some big bank from London came over and asked us to test their algorithms on demo accounts. And we it was like a game for us. So we were okay, we'll try beat the algorithms. And
right.
Obviously it was a bit to our detriment later on, because then all of a sudden the algorithms are obviously AI and they were picking up, and they're machine learning. So they kept getting better, and we could only be as good as we were. But I mean, we also improved. So I'm not gonna lie, we got quick execution. I used to go home, take my keyboard home and practice how quickly I could type, just to like really get the prices I was looking for. You know, it's in that fast-paced environment.
Wow, that's crazy. That's crazy, bro. But that actually is a really good point, because I think what you show there, and I think really good traders do this, is that they're always willing to see what they're doing and look for room for improvement, look for growth. So now at this point, you're saying you're pushing into indices a little bit more. What are you doing off the desk or before or after trading to still push yourself to grow? Trading remote, but then going in and trading a new market. I'm curious, what's your plan to stay growing?
Yeah. Over the last 2 years, I would say, my real focus has been my mental game. Purely because I think that's, for me, my next step to better myself with trading. And it's such a lot of traders will tell you, mental, you have to have the right mindset, you got to keep your emotions intact, your psychology's got to be right. I mean, there's so many factors that play it, but like I just keep focusing on that. And I mean, that's in my off time now, I'm always listening to audio books or something, just with a mental strength, maybe not relevant to trading, maybe it's sports or whatever, but it's always just mindset,
psychology, human beliefs, whatever it is, like some why are we thinking the way we think, right?
Exactly that. Yeah. So that's where my main focus has turned in terms of my trading. I feel like I'm capped in terms of I'm not going to say I'm capped. You never, but
capped. You know how to read a chart.
Always standing. I know how to read a chart. Yeah. I know how to read the tape. I know how to read sentiment and study the markets. But the mental game is the thing that takes you to the next stage.
Have you read The Mental Game of Trading by Jared Tendler?
We're just talking about that.
Yeah, that's a good one.
Yeah.
It's a good one.
Yeah, I have. I've read it a few times, actually. I enjoy it. And every time I read it, it just always new things pop up that I didn't think of the first time. And it's so rare.
It's not a common book either, you know?
No, exactly. Yeah.
I mean, he's not that big on Twitter either.
Right.
I just wanted to also ask, sorry, Mark, we've spoken about now how you read the tape and to take the trades and everything. We were speaking on before the recording about how you're scaling in and out of your positions, and Jared Tendler actually mentioned that about scaling in and out of his positions, or how he's met great people that scale in and out of positions. What do you think of that, and do you do that personally?
So back to Storm now. There was a big post up in Storm saying losers average losers, and it's always stuck with me. But at the same time, a good trader will know how to average and will know when to double down, or will know, like, sometimes the best traders, actually, that's when they'll make their wins. It'll come from that. And maybe their initial entries were wrong. And so, for me personally, I will enter trades smaller, especially now, on my initial entry, and I will look to average when I feel the time is right or things are turning, or also I like to almost have a core position going on a lot of the time, and then I'll add to that core or take off that core. So reason being, I've always got skin in the game, so I'm always watching closely, and maybe I won't sleep as much because I'm always checking the market middle of the night or whatever. But it's something that it sticks with me, and it won't be a big position, but it'll be a position. So I've always got something in the game, and it's always keeping me. I'll know exactly where that price is, and I'll know what's going on around that price, or what's affecting that price.
Would you agree that
I'm trading?
No, that makes a lot of sense, Mark. So would you agree that not look like, if you look at too many things, if you try to trade too many things, it gets distracting and you can't fall in line with the one or two things. And that's kind of why you have something on all the time. So you can feel like I'm all right, we're in bullish trend now. Tomorrow I'm going to come in and add to buys, that kind of thing.
Yes, exactly. I do agree with that. And yeah, I mean, with the JSE and the trading equities in the JSE, I know those shares inside and out now.
Right.
Like, just so for me, it's every day I come in, I kind of know where things should be priced. Although every day is a new day, I kind of know where it should be priced. But then trading with the indices and stuff now, it's that's where I like to I keep a core position and have skin in that game. And a lot of the time, I'll also hedge myself. I'll get into a long S&P and a short Nasdaq, and I'll start maybe adding to the S&P if I feel like the market's turning, and if the market's turning to the upside, and I'll get out of some of that position, cut the Nasdaq. Exactly, yeah. So I mean, that experience I also gained from Storm. We did a few years where we were managing funds for clients, but we had our own. We were our own discretion. We had a very limited mandate at the time. Obviously now it's a little bit more specific, but at the time we could trade at our own will, and it taught us our own strategies in terms of how to win, basically. So we had to learn,
I love that. Sorry, go ahead, finish.
No, basically it wasn't by the book in terms
That's
of
what I was going to ask. Did the prop firm have their own strategies? Did you have proprietary stuff that they were teaching you that you couldn't find elsewhere? I'm sure, right?
Yeah, exactly. That was sort of how it came about.
Does that go from strategy down to mental game, or is it really just technical strategy and fundamental bias and reading the tape and that kind of stuff? Was the proprietary stuff, did they have other ways of helping you hack your mental that other people aren't talking about?
So initially they didn't, but they did jump on that when they could see that the traders were struggling, because everybody goes through their bad phases and bad times. And at a point, Storm eventually got a coach in for us to all have sessions with, just to try and help us there. And it made a big difference. The guys all, and a lot of them didn't need to continue coaching off that, because they kind of almost started coaching themselves.
Right.
Myself included.
No,
not that you ever stop doing it. You got to keep doing it.
It's one thing to be coached versus one thing to always be learning. If you get to a certain point where the mental side of that coaching is not needed and you're day-to-day doing it yourself, I totally understand that for sure. You mentioned that you read the tape. Are you reading the tape on the indices as well? How does that work? Because from my understanding of the tape, you're reading it based on the pricing of the broker. So do you trust a specific broker to read their tape? Is that how you would lean into it?
Yeah, so on the indices, I haven't been reading the tape as much, also because it's trickier to pick up on the algorithms. From my personal experience, for me, compared to equities. But when I jumped onto the US equity market, it was pretty much exactly the same as what the Johannesburg Stock Exchange market is, in terms of reading the tape and the algorithms and the order flow and picking up on orders and seeing how things turn. Pattern recognition, but pattern recognition not on a chart,
based on price and based on order.
Yeah, based on price. Exactly that. Yeah.
Interesting.
So with the indices, I'm not reading the tape with the indices right now. I'm using a little bit more technicals, sentiment, and a couple of other,
which kind of makes sense.
Play, yeah,
it definitely makes sense. Because again, with the indice, how do you know its exact amount of orders, especially nowadays? I remember in 2016, they said that there was call it X amount of retail traders in the world. And I'm sure that some part of that is prop traders. And then in 2019, the BIS did the survey every 3 years. They did the next survey and it had increased by millions. So now with more and more millions of people getting into markets, I think a lot of people, especially people even in other countries, look to the US stock markets for their first trades. A lot of people come in and trade NASDAQ and Bitcoin, and they trade S&P, and they look for those volatile assets. So do you enjoy the volatility with your strategies, or do you prefer less volatility? I'm sure you enjoy it, right? Because that's part of the reason you're turning to those.
Yeah, I love the volatility.
Do you use hard stops?
I do now, yeah.
Okay.
But sometimes I won't. Okay. Sometimes I'll be a bit.
Have you ever been burned not using a hard stop? Have you ever been fuck, I should use a real stop?
Yes, many a time. Don't worry.
Do you think it's a real thing that brokers can see your stop loss? I mean, of course they can, because you set it as a pending order, but like, in your opinion, do you think brokers are, oh, there's a bunch of stops there, drop the price and then come up? Do you think they really do that?
Yeah, I do think so.
Wow.
Especially in the market makers. I think that's definitely going on. They know exactly. And I think they work together as well. So they'll know if somebody's priced on a different exchange, they'll know. The liquidity providers will 100% know.
Do you think?
And I see that.
No, sorry.
Chatting to some of the traders that I know that trade in real big size. I mean, they've told me that before. Of course, they've been squeezed out of positions. Yeah, because now they're going to come hunting for those stops, and they'll try to take the trader out. Yeah.
Definitely. I had an issue today. I wasn't in a trade, but I'm on my phone. It's about 11 o'clock in the morning. I'm going to the gym and I'm seeing Bitcoin on my trading view on my phone. It's moving. And I'm like you, even if I don't have a position on, I watch Bitcoin and the indices all day, all night. Cause it's just what I like. That's how I trade my best. And I'm looking at it and I'm like, it's moving on trading view, but this looks different than on my MetaTrader. And I have both of the apps on my phone and I go into the MetaTrader, 6 bars on the 15-minute, 5 bars on the 15-minute were not painting. It was frozen on Bitcoin for the first time that I'd ever seen. So do you ever run into liquidity issues, specifically liquidity with your with Storm, or do they have really good liquidity and they're able to get you into these markets no matter what? Because I feel like that's a priority that you probably get when you're working with a real prop firm, not a funding company, right?
Yeah, sure. Yeah, it depends on which asset classes we're trading. I mean, the equity market, we trade directly into the market, so there will sometimes have liquidity issues.
Okay.
But trading in the futures market, we most of the time won't have liquidity issues. We'll be able to get out or get in, whatever it may be.
That's good.
But back to the Bitcoin, because I've had my fair share of trading in Bitcoin actually. I started trading. Yeah, so when was it? So about 5 years after I started trading and my journey, that's when I started to look around and see what else is there to trade. And I started messing around in Forex and I started messing around in a few other things. And then Bitcoin, I did a trip to New York and I went to Wall Street and I went to go and meet up with some guys that I knew and went and chatted to them. And all these guys were trading equities, but they were like, no, you got to start trading Bitcoin. This is going to be the new big thing. And so I went back to South Africa then and started buying a bit of Bitcoin, but not just buying and holding. I actually started trading it on leverage and started actually trying to catch some of the moves just because it was a new asset class and it was so volatile. And I saw a lot of those liquidity. I saw a lot of those like liquidity pushing out like stops in on those exchanges. Yeah, and that opened my eyes up quite a lot.
Is it because they have no regulation?
Most definitely.
Yeah,
definitely. Yeah. And I saw that happening a lot.
Does it turn you off or did you like it? Were you like, I'm going to figure this out regardless?
Well, I liked it because then you could almost feel, and I would try to jump on trades when I could see that there were like those liquidation orders were coming through, and I would jump on trades and try to catch that. And, I actually did quite nicely doing that back in the day. Yeah.
That's interesting. That's very interesting.
Mark, also wanted to ask a question because on Friday we were speaking about so the difference between when you trade the indices and you let's say you have your pending order for your stop, right? Let's say you in and it tags you on your stop on the indices, right? You're going to get stopped out. If you risk $1,000, you're out at $1,000, right? But you're telling me about the equity. Sometimes on the JSE, you're telling me that it was trading like 6 billion volume, right? Compared to when COVID it was at 15 billion, if I'm not mistaken.
Wow, half.
So like half, yeah. And you're telling me like sometimes like you just didn't have buyers or when buyers or sellers trying to take you out at the price that you wanted or gap down. So explain the difference to the traders that are listening between getting stopped out trading Forex or in the indices, the futures, compared to the equity market.
Yeah, so with the equity market, when you're trading into the market, unless you're using maybe a market making sort of platform, the equity market itself, especially here on the JSE, and I mean I've seen a little bit on the US, but the US is a lot more liquid. So if you put a stop in, you'll probably get that price or close to it. Sure. On the JSE, you put in a stop to try and get out of a share. Say the share's at $100, and you buy it at $100, and you put a stop in at $90. Sometimes there won't be stock at $90, and all of a sudden your stop will execute at $80. So you would take a $20 loss, call it, that double loss. I and it's out of your hands because the stock would execute, but it would hit the next available bid.
Yeah.
And then you would take the knock. So that's why I actually stopped trading with stop losses on the JSC, or at least guaranteed stop losses, because it was a bit of a risk to me. If it was breaking news or something and a share went down, it would stop me out. And then all of a sudden it would bounce back up. So yeah, I would, that's why my execution became so good, because I would then maybe turn my position. I'll go short, but at the touch of a finger, like I'd be so quick. And that was back to that execution thing. It was a big thing for me, getting that execution right.
Do you?
And now that was also that was before the days of hotkeys and all that as well.
That's what I was going to say.
It's a lot
now
easier.
you probably have something where you're just boom, 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 and it's done, like a little shortcut.
Yeah,
right.
Exactly. Yeah, much easier.
With all your experience, Mark, what do you find? Why are you still trading, but all these other guys that came through the firm, they failed? What do you think is the biggest reason traders fail?
I guess it's going to come down to your risk management.
Be more specific. Tell me more.
So you never want to blow yourself out or blow yourself up. You always want to be able to accept a loss. Yes, maybe it's a bigger than a loss than you sort of wanted, but it's not going to wipe you out. You don't want to get wiped out. You want to be able to come back the next day, reset, or even if it's not the next day, come back the next week and just be able to come back and play. You don't want to ever be in a situation where you've been wiped out. And I've seen it with guys throughout my career that actually did wipe themselves out. That's to the point where they were actually in debt and they could never come back. And it got pretty ugly, and it can get ugly quickly. I mean, you get yourself into a hole in trading, it's hard to get out of that hole. So yeah, that's a big thing, I would say.
Risk management, controlling your position size. So you're saying this mindset of, even at a prop firm. So, because, people are listening to this and they're like, if I could just make it at a prop firm, they must know something different. I've been telling everybody that I don't think it is. Survival is the answer. Just stay in the game long enough until you find the strategy that you do well, and then you'll be able to do better with that. I feel like people, like you said, I called it self-sabotage. You titled it risk management. It's the same thing. They get in their own way. They think that instead of just taking the one loss, how many times have you seen a guy go one trade down by 9:30 and by 4 p.m. he's 7 trades down? You know what I'm saying? Like they go off tilt very easily. So do you have any tips for people that are trying to avoid going off tilt? Is it get off the chart and go meditate in the woods? Or like, what do you do to keep it so that the brain can take the loss? Like, how do you have no ego, I guess is what I'm saying.
I think you gotta be conscious that you take the loss, and you've got to realize that you've made a mistake, and you're gonna make the mistake over and over again. It's gonna happen in trading, but you've just got to learn. And even if it's just learning a little bit more, you've got to learn from each mistake and try and improve on each mistake. To know that the next mistake is not going to be as big, or the next loss not going to be as big, sort of thing. Size down when the market's not giving you anything, or when you're coming back, go back to demo. I actually did a period where I did 3 months back on demo when I was going through a bad patch in 2018. And it's, I missed trading, but it also just gave me the discipline again to just like, okay, calm down, don't get all rushed.
7 years into your trading, you still did that, bro. That shows that you don't have an ego when it comes to your trading. And I think that is why, one of the reasons why you probably succeed is you were like, hey man, I'll go back to demo. I don't have any ego to get in the way and be like, I got to start trading. Because if you went and started trading right then, you probably would have lost more money, right? Because the step back allowed you to refocus and rethink, get in the longer term time horizon thinking, just get the brain working in the right way again,
100%. It and helped my trading so much when I came back. I think I had my record month was the month I came back.
I was going to say, I bet you that's how it works.
Yeah.
Right? So do you think right now in current market conditions, people, because right now with it not being 2020, people are getting blown out. Everybody who was a day trader is no longer a day trader, right? Because you couldn't just buy something and make money. It's different now. Do you think that something we are seeing is that aggressive profit taking sooner, at maybe instead of waiting for 3R, you're getting out at 1R and locking your stop? That has been a big thing for us. Have you seen anything like that? Or is it maybe the opposite and you're running trades longer? Like, what is your opinion on that?
No, I think that's quite correct. And I have seen that in the market right now. Guys are a little bit tighter. Nobody's wanting to really go. I guess nobody knows which direction it's going to go
That's
now, and it's making it a lot trickier.
Yeah.
With maybe a few months back, there was the market was selling off quite aggressively, and it just felt like everybody was on the wrong side of the ship, and everybody was getting caught long. Guys were picking bottoms, and they were just getting tossed over day by day. And it almost feels like now, like talking right now, that the markets, it might squeeze a little bit. Yeah, I think that there's a lot of guys that have also learned about shorting, and now they're playing the other side of the ship. And I feel like that's just personal what I think could happen now. I think
I'm sure you've seen everybody talking about, we're right at that 200-day moving average. Same thing from 2008. Then it dropped 50%. So exactly, right when everybody thinks that's what's going to happen, that's normally not what happens. It normally you got to be 2 or 3 steps ahead of the game. Yeah, you really do.
And I think that the retail trader,
you have a lot of experience, which is why you're going to come in a period like this, and you're not going to be saying short everything. It's going to repeat. You're saying, let's think 2 and 3 steps ahead. More traders are in, more amateur traders. How is that going to impact this? And I think a new trader would come in and say, oh, history is going to repeat itself. Short everything. But experience says, no, that's not always how it works. We could get another 20% to the upside before we get another 40% to the downside,
Yeah, exactly that. I think in this market now, you've got to be a bit more reactive than predictive. You got to, and the opportunities will be there every day. You just got to react rather than sitting on a trade that might not be going your way right now, and then all of a sudden your mind starts turning, why is it not going my way? And you get into you start getting into the bad psyche there.
For sure.
Where if you just sitting on your hands for a little bit, waiting, counting to 10 before you enter the trade, you might find that all of a sudden the opportunity pops up, react, hit it, make your cash, move out, look again, sort of thing.
I love that. I have I got a 2-part question, then you go, James.
Okay, perfect.
Why don't you trade gold? And do you think gold is manipulated?
I actually do trade a bit of gold.
Okay, good.
But I've been burnt in gold before.
Same.
Purely because maybe I was trying to predict this should happen. This is gold price should do this, and it never really plays out like you think it should. And I don't know if it is manipulated or if it's
How is it not over 2,000? With inflation.
I know.
Yeah, that's what I'm saying. I'm like, how are they keeping this price under 2,000? That's why I when people ask me about gold, I'm always like, I think gold should be $4,000. So it makes sense that it's very tough to especially on a day trading basis. Just the volatility is crazy. It'll pin you out. It'll pin 100 pips higher and then still fall if you were short.
And then still fall. Yeah,
it's violent, bro. It's violent.
It is.
What were you going to say, James?
So I wanted to ask Mark. So Mark, since you've been trading full time now, and Mark's got a son now, and he's married to, as I said, my mate's sister. Trading full time. So what does your day look like now on a day-to-day basis? Because I think lots of people are intrigued by trading full time, right, Mark? There, that thing, but I trade full time and whatever. And I think so. Just tell us what your day-to-day basis looks like, and also maybe because I know you're on a more personal level, maybe if you could want to tell the listeners about your side business that you also are doing on top of your trading that keeps you active while at the desk when maybe the markets aren't creating opportunities or providing you opportunities.
Yeah, sure. So back to how my day works, or sort of the timeline of my day. I mean, I'll be up early, and for me, I'll be up early in South Africa. I'll be up at 5 a.m. And the first thing I'll do is I'll check the Asian markets and Australian markets and see what's going on there, see how the commodities are trading, see what's going on with the currencies, see if there's any moves there, just to see how my day is going to go in terms of do I need to be at my desk at 9, or do I go and carry on with my life? Right. Yeah, I'll get to sleep in. There's no sleeping in now with the child, but
no,
it used to be sleeping. Yeah, but then in general, I'll always like to be at my desk from the market opening. So the South African market and the London market open the same time. So call it the London session. I'll always be at my desk for that first hour, just to see. I often won't trade just because the market's still unsure about direction, and I think the US leads the market. markets in globally. So I won't get married to any sort of direction then and there. My best time of the day for trading is when the US market opens, and that's about 3:00 our time, 3:30 our time. Yep. And obviously I'll be watching the pre-market as well here with equities and stuff, just to get a good read on what's going on in the NASDAQ or the Dow, to see if there's any big shares moving there, sort of thing. But that is probably the best time of the day for me to trade the South African market, the US market, in fact, everything. Those few hours are the time of the day. So back to then the side business. Yeah, I started a side business with a mate of mine about 18 months ago.
Nice.
And it's still in the early phases, but basically it's just a fast food business, and we're trying to start a fast food chain of a new brand.
That's awesome.
Selling fast food to South Africans.
That's awesome. So, why fast food?
Yeah.
What pushed you to want to do that?
I just feel like when I moved to Durban from Cape Town, I was getting lonely trading, and I felt like I need to do something else with my time, because I am gonna just lose money if I sit at the desk all day and force trades. So I just thought, well, let me try to be a bit entrepreneurial and let's just think, what do people want, and what are people always going to want? And I just thought, okay, food. Yeah, exactly. And it's in an emerging market like South Africa, people are on the move all the time, and they don't have time to go home and cook and whatever. So I just thought, well, let me focus on food, and that's sort of how that stemmed out.
Does that help? Yeah. Do you think, does it help keep you busy so you're not stuck at the desk forcing trades? Absolutely, right? It's got to be.
It does, but
what about when you miss a trade?
Yeah, exactly. Often there's times when I'm like, I need to be at my desk. But I mean, I've been quite good now with trading on my phone as well.
Nice.
I've actually become really good with it, and that's made a big difference to me. Yeah, so I can trade on the go and I can trade on the move, which helps a lot.
Nice.
I love it.
Yeah.
And Mark is super. How Mark comes across to me like he's a jack of all trades. Like he can.
I know, bro.
Mark trades every asset trade, and he can come up. He's like, I like this on the phone. Let me take a position on the phone. You can do it all.
I think what we should do, boys. I think we should stop our first conversation here because it's been an hour. Let's see what the comments say. Everybody listening, if you watched all the way through, listened all the way through, put a comment on Spotify, on iTunes, or on YouTube. Let us know what questions you want us to ask Mark next time when we bring him on for round 2. But listen, Mark, thank you very much for coming on, brother. It's been fantastic. I'm sure there's been some value for everybody, new traders, experienced traders, just new insight, because talking to somebody who has so much experience always brings value. And James, I appreciate you bringing him on, bro. This has been a really, really good episode.
I agree. Thanks, Mark. Boys. We do appreciate it.
Yeah, Mark, have a great rest of your day. James, thank you too, bro. And for everybody listening, we'll see you guys in the next episode.
Thanks, guys. Been great.